Hello my fellow investors and welcome back to another top 3 video. Today guys, we're going to continue the series on doing the top 3 companies from all the different sectors. So far we have done ETFs, tech, communications, consumer defensives, healthcare, and today we're going to cover financials. I will refrain from mentioning the big companies like JP Morgan, Wells Fargo, Visa, MasterCard, the ones that people know. I'm going to go for the little ones that actually have some decent fundamentals. Don't necessarily know if they're at the correct price. This is not a discounted free cash flow approach or evaluation when it comes to these companies, but solely looking at fundamentals. You guys could then make a determination whether or not you may want to look at them. And by the way, one of these looks absolutely fake, which it's amazing to see. So we're going to cover that today, guys. Before we get started, make sure to like, subscribe, comment. Really does help here with the algorithm on YouTube as well as Rumble, and make sure to follow us on X. And of course, remember that this is not financial advice and that every investment is the present value of all future cash flow. So with that said, let's get started with number 3 when it comes to the financial sector. So number 3, guys, it is the company Travelers, which it is an insurance company. And of course, you all know that I've been trying to get into the insurance industry as of recently because there's a lot of money to be had here. However, when it comes to Travelers, this is not a healthcare insurance. This is mainly when it comes to property. So you can see over here, the main things that we can get a quote for is things like auto, homeowners, condos, renters, etc., etc., etc. So yeah, it's not the kind of insurance I'm looking for. However, it may still be one that you may want to buy. Looking at this graph, we can see that on the 1 year, they're up 1.86%. And on top of that, on the 52-week range, they are very, very close to that 52-week high. So right off the bat, this doesn't look too attractive. However, let's take a look at some other metrics. In regards to a dividend, they do pay out a dividend of 2.05%, ends up being $4 per share, payout ratio of 40.55%, a 5-year CAGR of 5.34%, dividend growth rate of 18 consecutive years. And if we take a look at these graphs, the net income kind of looks a little bit off, as you guys could see over here. Pretty consistently increasing from 5 to 3, massive spike, but then it's been coming down as of recently. When it comes into the revenue, this one's increasing very, very nicely. The assets minus liabilities peaked as of around like 3 or 2 years ago. And so far, they have been coming down, but it's still in the positive when it comes to the total average assets and total average liabilities. And when it comes to the shares outstanding, you can see a nice steady decline throughout the past 5 years. So of course, starting off with Travelers, you guys can see it's looking like a decent company. Maybe do a little bit more research, especially when it comes to the net income as well as that assets minus liabilities, but it's still a pretty good contender for a solid company in the financial sector. Looking at now the second company, we got the company Everest, and this one's a very, very interesting one, guys, because for all of those of you who may not know, this company is in the industry of reinsurance. Now, I personally don't even know what in the world that is. This is the first time I'm hearing of it, but we can see here that Everest Group Ltd. Through its subsidiaries provides reinsurance and insurance products in the United States, Bermuda, and internationally. The company operates through reinsurance operations and insurance operations segment. The reinsurance operations segment writes property and casualty reinsurance and specialty lines of businesses through reinsurance brokers, as well as directly with ceding companies in the United States, Bermuda, Ireland, Canada, Singapore, Switzerland, and the United Kingdom. So again, it's not really a company that I necessarily know too well when it comes to the industry. However, looking at this graph though, on the 1 year, they're up 5.96%. And when it comes to this dividend, they pay out a yield of 1.89%, which ends up being $7 in annual payouts. Payout ratio of 12.67, 5-year CAGR of 5.11 with 2 consecutive years of dividend payment. Looking at these fundamentals, starting with the net income, you guys can see that it's very, very choppy. However, it does almost have a pattern to it where on the 4, 2, and the current year, their net income completely spiked. And the years that I didn't mention, they were slightly lower, but all in all, the trend is to go up. So very, very peculiar kind of net income. Definitely something to do more research on. It may just be the industry. Looking at the revenue looks absolutely incredible, pretty consistently increasing throughout the past 5 years. When it comes to the total assets minus the total liabilities, nice consistently increasing as well. One off year, that was 1 year ago, but then you can see as of today, they have recovered. And when it comes into the shares outstanding, very nice, consistent across the board. They had 2 pretty big buybacks, the 2 and the 1 year ago. Currently though, they did spike it back up to around 43.4 million shares, but that's only a little bit higher than what it was 5 years ago of 40.7 million shares. So this is definitely a company that you're going to have to do a lot more research if you would like to invest in it, because at least just from the industry alone, it's not something I'm too familiar with, and maybe some of you are, maybe some of you aren't. Again, please do your own due diligence, because when it comes to these kinds of companies that are a little bit hard to understand when it comes to the industry, you may get the rug pulled right under you if you do not do your own due diligence. But as you guys can see, the fundamentals look a little bit enticing here and there. And now the last company that we're going to take a look at, it is Brown & Brown Insurance. So another insurance company, and this is the one that looks absolutely bonkers. Those fundamentals just look completely fake. Guys, I swear I did not make them up. They're that perfect. We'll get to that when we get to that. But this is another insurance company, and this may be one that you may consider. If we take a look at what they do, when it comes to the insurance, guys, they provide insurance in the retail, national programs, wholesale brokerage, and services. They provide insurances to the point of like employee benefits insurance products, personal insurance products. You got eye care insurance, financial, physicians, real estate, title professionals. They do a bunch of stuff. So this is a very, very wide moat when it comes to what they actually do. And if we take a look at this thing on the 1 year, this thing is up 20.79%, which is by far the biggest one that we have seen right now. And in regards to a dividend, they do pay the dividend. It's a tiny one, a 0.7%, which becomes 52 cents in annual dividends per share, a payout ratio of 16.85, a 5-year CAGR of 9.26, with 24 consecutive years of dividend payment. They're 1 year away from becoming a dividend aristocrat. And by the looks of it, they are able to actually give this out. So taking a look at now the fundamentals, look at this net income. This looks absolutely crazy. Those graphs hit those trend lines every single time. Looking at now the free cash flow, the exact same thing, nice consistent increase. The revenue, the exact same thing, nice consistent increase. And the total assets minus the total liabilities, once again, nice consistent increase. Absolutely insane, guys. Absolutely insane. The only one that is a little bit off is, once again, similar to that of UNH, the cash flow minus the total liabilities. You can see that it's actually a less steep graph than that of UNH. The worst year was 1 year ago, where they did just collapse. But at the same time, you got nice growing consistency in pretty much all of the above other metrics. So I look at this, I'm like, this doesn't seem too bad. And of course, when it comes to the shares outstanding, they have increased it a little bit. You could see 5 years ago of 279.6 million shares to today of 284.3 million shares. But that increase is so tiny, I would actually just neglect it for my own personal sake. And that pretty much does it for the company Brown & Brown. This is by far the one that caught me off guard. I was not expecting this in the slightest, and honestly, this is the one that I may actually look into more in the future, especially if it does take a tumble as well. So thank you guys so much for watching this top 3 financial companies. Again, I just picked the 3 that had decent fundamentals in the financial sector that a lot of people don't take a look at, right? I could just take a look at MasterCard, Visa, JP Morgan, and you guys would know exactly what to expect. But here are 3 that you may want to take a look further. Again, this is not financial advice. Every investment is the present value of all future cash flow. Not telling you guys to buy this company, but just to do more research, because the fundamentals are leading in a direction where you may want to buy them, assuming that you like them. So of course, make that decision for yourselves. But anyways, thank you so much for watching. Make sure to like, subscribe, comment. It really does help here with the algorithm on YouTube as well as Rumble. Make sure to follow us on X. So with that said, peace out, and we'll see you all next time.